Hello traders everywhere, Adam Hewison coming to you from the digital studio. Today we're going to be looking at 3 bank stocks that I think are in trouble. And here's the first one we're looking at is JPMorgan. And I want to put a trend line in going back. This is going back all the way to 2007. I'll start here and I'll just draw that really up to there. And I also want to put a Fibonacci line in from the highs that we saw here just around 70 to the lows just below the 30 area. I think we could see this market come back to the 45, 50, 45 level with not too much of a problem, and that's where it should find support. But again, you're finding resistance on the RSI line, which is not a good thing, and I think we'll see this market turn down. Plus, if we put our trade triangles in, you can see all of our trade triangles are all negative on this particular bank stock. Pretty much the same picture for Goldman Sachs, even though they reported today. But again, this is not a good sign, and if we put a trend line in this market right here, you can see it's basically broken below the trend line. That's a long-term trend line going back to July of 2012. So it's not just a short one, it's a long-term. I could see this market coming back down, and if we put our Fibonacci in there, we're looking somewhere around the 140 area, which would not be another $40 lower than we are right now. So it's not out of the question we could see Goldman trade down to the 140 level. This is Bank of America. Again, we have our trade triangles negative. We're just at the 50 resistance line. I think we'll see this particular stock. We'll scope this out, let's say, to a 2-year chart. Below 15, this market's in real trouble. So it's only $1 above that right now. So if you see it like 14.95 print, then you want to be short this market because it's going to have a big drop. Netflix is chopping around, but it's still in a basic uptrend. We want to watch that very carefully, of course, because that could be reversing. But that's a support line. I think below 95 would be a real serious problem for this market. We just dipped below the 50 line in the RSI. Not a good sign, but again, let's see how this market plays out. This is gold. Gold looks like it wants to go higher, possibly up to the 1,220 level, or certainly the 1,200 level. I think that's what our target is. We put a little pivot point, a double bottom right here. So I think we can zip that over to the top. Very bullish on gold right now. On the euro, we're still sort of locked in this trading range, just going nowhere. It's kind of a boring, but all of our trade triangles are positive on the thing and on the euro, and it looks like it wants to continue to sort of creep up, if that's a better word for it. But you can see we were back way above, almost at the 140 level. We've had a big drop there, so I think we could see this market come back up and recover a little bit from where we are right now. This is the Dow. Again, we put a 55, minus 55. It's a trading range. Not much more to say about it than that. Same on the S&P 500, 55. It's a trading range. A little bit different on the NASDAQ, which is really still negative with all our trade triangles down, but we are just above the 50 level, so we may be making a turn there, but again, it's not complete, and trust those trade triangles because they're still pointing lower. This is crude oil. Crude oil is sort of back down just below the 50 line. It's had a reversal from where we thought it would go, the 50 area, so it's got up there, it's back down, and I think we're going to see this market just be in a trading range for the time being, but our trade triangles are mixed, which means the weekly is up, meaning the trend is up, but the daily's down, meaning you should be out of this market. The signal came in at 47.76, currently trading at 45.25, so you should be out at 47.75. Hey, I'm Adam Hewison. We covered a lot of markets today. Be sure to check out those bank stocks. We'll see you tomorrow. Have a great trading day, everyone.